Hello and welcome. It is the 10th day of September 2019. My name is Derek. This is the Money Charts channel. All bets, trades of the like within each his own risk and their own reward. Precious metals. Let's start off with thin silver. Kilo, which is the lows at the end of May, 14 and a quarter. Not quite getting to 20, and really it's decent a ways away. 19 and 3/5, making it to this high. Currently in at about 18 and a dozen. Or coming, it's already came back to the 18 average of lows. It's still hanging in there. It was in this correctionary phase here. And this is the interesting one because you were in a downtrend. You established this level of resistance in here. You barely got above it again after this nice correctionary move. Thus a leg higher. And then the rally really got going, of course. Breaking 15 and a half in the middle of July. And when I look at empty space fill in here, well, that's when I would need to look at things like the longer term, 3 day, weekly, and stuff like that. And amongst the 3 day chart, well, in this here, we have action that's coming to the 18 average of highs. The lows is in at 1682 and previous key resistance in at about 16. And that key resistance should be the same on the weekly. 18 average, and this is one more people would look at, although people don't look much at the 18 average like I do. But as far as the weekly chart is concerned, you have that situation of establishing resistance in here. And even though you came below this 18, you still sort of corrected it in that of making a higher low. But then on this break in here, it's had a phenomenal run, key leg higher. And the 18 is just waiting for it to come through. It's going up at a very high rate of ascent because of the move. And currently the 18 average of highs is in at 1713 and the lows is in at 1628. And as the monthly goes, well, this is another attempt in reversing this trend. The last one failed as far as making it to go higher. Oftentimes for failed moves comes fast moves in the opposite direction, not here. Unless you consider this to be fast, but I consider fast to be just a normal leg lower, which would have been at around like 1180 and lower. That didn't happen. So even though this failed, it so far has been correcting, so successfully doing just that. It's correctionary phase. So now this is attempt number two. Since of course this decline, it got to the 18 highs in here, but not above it, and not even it didn't even get close to it didn't even get to the highs during any of this run. Not until in here, after the bottom. So we have one of the holding periods. This is the monthly time frame, day number 10. So holding in there so far, a little bit of higher gains. 18 average of highs comes in at 1640 and the lows comes in at 1515. And at this stage, whether it can come back and find a move down to this area, I mean, the volatility is so big on these markets. It is overextended on the daily, so it very easily could fill these rooms, these gaps. But at the same point, like all these bull markets do, how many times for me anyway, I've seen so many situations where in a bull run, you have your move back to the 18, maybe you pierce below it, maybe you don't. Either way, if you come close to the lows, that's big. And then you get above the 18 average of highs and, well, excitation in all these ones in here. There's this one here. That worked out well. Even this one here, because it did come down in here. And then we have exit here. After I showed a little bit of strength in here. In here, this one was fast. And then when it exited here barely. And then it really didn't have much of a fall from this point. And there we see it exiting in here. We see it exiting here and here. So it's a good thing. But for it to get above in here, we're looking at about 18 and 2/3 on the daily term time frame. Transitioning to short term, this is the single hour. And I talked about this at the end of last week, the failed breakout. Because after in here, when the price action came down to 18, basically where we are now, but 18 and dime, 1807. It had this phenomenal rally to go up to 1880, attempting at this time to have the end of this correctionary phase. Key low, wherever you want to put it, definitely around here from the last one on the hourly, and even this one here as well. So you had this break of this ascending, key leg higher. Okay, so at this stage in here, it was a match of this low. I mean, obviously it didn't go deeper. It has, but it's only went down to here, at least thus far. And so anyway, when you have that kind of move and you've went to this high, you're stating then, well, it's either going to be a reversal and go higher, or we're going to probably have a failed move lower. Well, it didn't go higher. And as far as that failed move lower, well, this was that key support. It technically made a new low. So as far as 1775 area, probably should have been a little bit lower for a failed move. Either way, that level of support in this area of 18, it did manage to at least have something to classify this as a leg lower. But now we finally had an attempt. Well, not finally. It's well, I'd rather not. Let's state that finally way. This is the second real attempt in reverting the trend, and maybe third. You have one. Obviously, this one's obvious. This one is why I'm saying that. Here, it's holding in there, but for what it's worth, if it has to get decently above the 18, this one doesn't count, this one doesn't count. Most certainly this does, and the one we currently are seeing does as well. So as of now, the market is attempting to end this downtrend given that 8 o'clock in the morning, leaving the 18 average of lows closing, and it managed to get above the short term 1802-ish area. Of course, right now above it at 1811. If we take a look at this on the 15-minute term, there was this level of resistance established between 4 o'clock and 6:45 in the morning, obviously above that. Getting towards that point and just consolidating a little bit through time for now. So therefore, if you see that these are the levels of short term, the $18 not hold too well, then that's going to be continuation most likely of this downtrend, or at least at the hour is the best one to go by, where we'd have a little bit of a failed breakout here, most likely break that 1780 low and go down a little bit further. Thus, as I've been stating on the 3 day and all of these, maybe fill some more of this empty space. And as far as gold's concerned, let's put up on the daily. So as far as resistance at this level, it congested it in this for a while here, then it supported it for a while, and now it's breaking down from it. So yeah, there's been resistance. It might just be congesting at it, as it's been, and that's when you go below it, above it, and you pretty much just stay within that area as a good median average. That could be the case. It's now down to this lower area of support. It is below the 18 average of lows, and it has been consistently for a few days. That last time we can say that, I guess maybe in here, which would bring us to the April lows. And yeah, with these 3 days, okay, so we'll correct on that. Weekly chart, just entering it, 18 average of highs coming in at 1481 with the lows at about 35. And on the monthly term, there we see this big level comeback levels at 1321, which is the area of the 18 average of closes and really the 18 average of lows in next month after that. And definitely an area where it could easily come down to. I'm not going to try to predict if it will or wouldn't. It definitely wouldn't surprise me one way or another if it does come down here. But it's one of those spots where if it does go, have a retracement down to 1321, that's where I would deem mathematical probability odds to be very high that you would be having as a very good spot as far as buy, knowing that from that point on, what would be more likely if you're in the 1320 area? Would you be more likely to see something in the area of like the low 11s or mid, like end of the 1100s, or would you be more likely to see a retest of 15 and a quarter? And my answer would be more, way more likely for 15 and a quarter test. And that's of course if it does come down this level. Either way, I'm expecting the next key move to be that between 1669 or a break above, basically 1700 even, or that of the 1300 low change. So when looking at this again via the 8 hour, as long as it's in this range kind of deal, well, then I'm just going to be waiting, and the break of either one's going to really help me determine which one it's going to go to, and wouldn't surprise me either way if there's decent continuation from that direction towards those levels that I've talked about. Let's go to the ratio of gold and silver, and within it, of course, the huge move first with gold, and then these just big red moves, 2 legs lower, and the second one being huge. And I was impressed by like, wow, 8 consecutive days of like a 0.5% or more in each consecutive day. And then this 1 month or so correctionary phase run in here, where the ratio, I used to hear like a dead cat bounce. Something goes way up, and then you have like a small little bounce, and That's what I remember learning in my early days in 2007, 2008 when I was learning market, well, charting basically. For situations like this, big fall, and then you have this little bit of a bounce, and you're probably going to have a hard time sustaining that. And well, in this case, it really had a hard time as when it left the 18 average of lows here, August 24th is when it left it. This is just a huge move going from 87 and change down to 79. At least for the precious metals markets, cryptos could have bigger moves than that. But that's the whole point of it. That I wouldn't be surprised to see these moves get bigger in time. Thus, this just being nothing compared to what could be and should be coming soon. But in this case here, from this, another one of those dead cat bounces, if you will. And another interesting thing too is it's just uh, a lot of times markets just come back to areas where they come back to or they were from before. And in this case, where it was 85.70 to like 86 in this level of support. But when you have a move of huge proportions like this, sometimes that's just not going to happen. You're going to have, I'll use that dead cat bounce term again because this was a huge move and a nice little, definitely not as huge, move on the other side. And that's exactly it again. Price action looking to leave below this 18 average, and we look at this say on a single hour term time frame. I guess you could call that as the bounce in here where you have an amazing run. Who cares if it goes through the 18 lows like this? You establish that empty space from this low to a higher low, and then you manage to get above it. Not much of a leg higher, but it did hold and stay above it for a while. But it does seem as if within the previous hour period that it's looking to want to leave this range. And if that's the case, I wouldn't be surprised if we retest this level, and even who knows how much further we go. As if we do have continuation moves lower, we're talking about things like with a 3 hour time frame coming up, having this move from here, and well, we had all of it before, but single hour, that's where we were, but 8 hour. That would be a failed breakout. If the 18 average lows doesn't hold in here, and you see it down in here after a move like this, I would be fully expecting to go below the low of the 79.18 handle. And on the flip side, of course, breaking out above this high, that means on the daily chart, it's got a long, long, long ways to go now at this stage for this market to even consider correctionary phases. This is most certainly firmly now in that of a bear market. I'm going to be doing a crypto video soon. I'm just editing this video now, so that's Adam going higher for me. That's okay. But anyway, uh, I'm going to end this video. Yeah, we're firmly in a bear market right now. So the actuality or the prospects or the probability odds of breaking down below this low and having a new moves is high, and yeah, it's got a long ways to go now for me to consider a correction. At least for now, it's got to at least establish a level of support, and it can do so below the lows and establish the 18 resistance at the 18 highs. Right now, it has done so at 83.75. 18 average of highs is lowering. And sort of like it did in here, it got to this level of resistance, it established it, and even during this run here, was never able to retest it. Thus, it established a big level at 88 and 8/9, or all eights, that it was unable to get above, and then yeah, down it goes. Thank you for tuning in. Have yourself a great day. Bye bye.